So may I now introduce the speakers joining today's discussion. We are very delighted to join by four distinguished speakers. First of all, Luying from HSBC. She's the head of sustainable bonds, DCM market, global GBM, Asia Pacific. And we have also Xiaofei, Green and Director of Green and Sustainable Solutions, CIB from Natixis. And Julien Duquenne, he is the Executive Director, CIB Green and Sustainable Hub, and he's also from Natixis. And lastly, we are also very pleased to join by Sean Chang. He's the head of fixed income of Ping An of China Asset Management Hong Kong. He will be sharing with us the investor perspective during this discussion. So without further ado, let's kickstart our discussion. In the next 15 minutes or so, we are going to have a discussion on the challenges and opportunities development of the sustainable finance market in Asia during the COVID-19. To kickstart, let me turn to Julien. So Julien, we've seen an enormous amount of market activities and enormous amount of macro news from central banks around the world. So to help us to set the scene a bit, could you give us a quick snapshot on what's happening in the global sustainable development market on your side? Because Julien, I know you're based in Paris. Julien, over to you.
Yes, thanks, Evie. Good morning and good afternoon to everybody. Hope you're all safe, and thanks for joining this unusual digital I would say seminar, but I think we will get used to it in the coming few weeks, if not months, and that is going to be, I would say, a strong development for a new way to work and interact. Yes, we've seen a lot of activity. I mean, in this unusual situation, again, a lot of, I would say, impact in all sectors, including, of course, the finance world. The activity due to all this terrible lockdown on the economy, the drop in GDP, which in Europe and of course across the world is expected to be close to 6, 8, or even 10% at the end of the year. Governments are putting some, let's say, initiatives on the table, and we will come back on this later. I think this is a very good opportunity to foster the sustainable finance as a strong tool to, I would say, channel and govern this money to be put at work. But I mean, if we just look behind on this first quarter, start of the year was quite slow for the green bond, irrespective of the COVID-19 situation. And then we've seen a flurry of lots of issuances, especially in the, I would say, broad acceptance on the social bond, I would say, framework or structure, especially from sovereigns and multi-development banks, MDBs. We expect, of course, a second wave to come with the banks, hopefully with corporates. We've seen lots of issuances, and I would be more than happy to get some, I would say, inputs and discussions point on what has happened in China on the onshore market, where we've seen corporates issuing lots of COVID-19 related bonds. And that would be an interesting point as well to discuss what's the governing framework behind this. So yes, we've seen a slow start in pure green bond and green loan market start of the year, and then due to the situation, a flurry, a big, I would say, expansion on the social bond front, and that is something which is very interesting, and that will pave the way again to I would say, develop further the social bond market, which was, as you all probably know, lagging slightly behind the green bond market, which was, I would say, reaching some sort of, I would say, very matured market. Social bond is clearly something that can give us a lot of levers for accountability, to use, I would say, this money and to put this money at work on a specific purpose.
Right, you've mentioned very interesting points about social bonds, and also we've seen, like as you mentioned, the policy measures around the world to cope with the COVID-19 the crisis. So I'll come back to you later in the discussion on the green stimulus and all the macro policy measures. So right now, let me turn to Xiaofei. Xiaofei, we've seen that the situation in Asia is actually quite similar to the global market. On the green bond market side, that we actually seen some adverse impact about the crisis on the market development. But on the other hand, I think we also seen some green shoot in Asia, such as in Japan. We actually saw some increase in the green bond issuance number. So could you share with us some of your insights into the development of the market in Asia? Xiaofei?
Yeah, definitely. Thank you, Abby. As you mentioned, Japan, that we see a lot of development in the green bond market, that things already last year. And in 2019, that the green bond issuance in Japan was amounted to almost US dollar 7.5 billion. So, and we see one of the main reason actually behind that, why that market developed quite greatly. That was also because that the Japanese government and also the stock exchanges have introduced quite some schemes to support their domestic green bond market. For example, the Japan Credit Rating Agency have offered a rating scheme to rate the green bond that issued in their domestic market, meaning that could save for the issuer to save both the cost and the time to issue the green bond in the Japanese market, because they do not need to have a separate SPO. They also do not need to have a separate framework. They just need to include some wordings in their credit documentation, and then they can issue the bond in the domestic market. So because of that those measures definitely accelerated the Japanese market. Yeah, and also related to the current COVID-19 crisis in other APAC regions next to Japan, that we see also as quite some development on the bond issuance. That, for example, that we see the social bond definitely went up, and also the green bond to a certain degree has been slowed down. So yeah, so in that sense, that we also see that. And also, if we want to, from a policy point of view, that what is happening related to this COVID-19 crisis, that we see that in APAC region, which is quite similar to the rest of the world, that government have introduced quite some monetary and physical measures to protect the economy and to provide also the liquidity into the market. For example, in China, we see that the government introduced the policy not only to streamline the bond approval process, but also very actively calling the state-owned banks to purchase those bonds on the market. And in Hong Kong, for example, that we see the government announced the hospital development plan, and also the coronavirus financial relief package. And also in Singapore, for example, the government announced that they want to triple their healthcare expenditure to Singapore dollar 12 billion per year. So we see a lot of this type of development in APAC.
So, thanks, Xiaofei. On the Chinese green bond market, I think let me turn to Luying, because Luying, she has been working very closely with the Chinese green bond market. I'm sure you can share with us a lot of insights into this market. So, can you tell us more about what was the sentiment like in the China green bond market in the first quarter, and how do you expect the market, the direction of the market going forward in the Q2?
Very good. Thank you, Ivy. And thank you, Julien and Xiaofei, for let me go back to the APEC market for a while. So we mentioned that the bond market issuance in Asia Pacific in 2020 are actually down due to the market turbulence. According to Dealogic data, it's down by about 10% for the all bond. But we believe that the green bond market are actually showing some sorts of resilience. And then we see the green, social, and sustainability bond market in Asia Pacific issuances is about $13 billion, which is about flat to last year. And then in April, we do see some recovery in the bond market activities. So we see Republic of Indonesia, China and China Travel Service Group will return to the market in April. And then I think to the continued rally of the market conditions, we may see some cautious picture, but I think when the virus situation is calming down a bit, we would see the bond market return to normal. Mm-hmm. When zooming into Asia, then I think people might be surprised to see that the market situation is completely different. And then the total bond issuance in China's onshore market, which combine both the interbank market and exchange market, is nearly RMB 9,000 billion in 2020 so far, which represents a 30% increase over 2019. So this is actually mainly driven by the strong policy support from the China Central Bank. So for example, they have cut the reverse reserve ratio twice, and they have also lowered the lending rates in order to release the fund. This is also driven by the fact that due to a more difficult market, the international G3 bond market, we see some of the Chinese issuers who may normally tap the G3 market are now actually returning to home and then raise funding in the China onshore market. So we can see that the China bond market in 2020 are booming a lot, but it's a little bit maybe a bit of negative news that is if we look at the green bond segment in the China green bond market for 2020, it's actually only $2.5 billion in Q1 2020, which is compared to over $5 billion in 2019 in Q1. So we believe the temporary decrease in green bond issuances in the China onshore market is because the issuer are turning to another very important product, which is the virus prevention bond, both Julien and Xiaofei mentioned. So for now, we have seen, and actually today there is an FT article referring some data and say that so far there are already over $20 billion of virus prevention bond issue in the China onshore market. This is a very close family of green bond. It's a kind of social bond where the use of proceeds would help to fund the COVID-related expenditure as well as help corporate to overcome the difficulties. But if we take a little step back to pre-crisis in 2019, we actually see very strong growth in the China green bond market. And then Ivy, CBI, and HSBC, we are going to publish the China Green Bond Market report very soon. I think we can give some high-level data now. Is that the total issue number in 2019 of the Chinese green bond market is actually over $15.5 billion, which represents a 33% growth in 2018. So we believe that after the COVID, we expect the China green bond market actually resume the momentum. We expect it to continue the growth as in 2019. And then let me quickly touch another very important segment in the Asia green bond market, which is the ASEAN country. So for example, Vietnam, Malaysia, Indonesia for the 10 ASEAN countries. According to the ASEAN Green Bond State of the Market report published by CBI and HSBC, we saw the green bond issuances in the ASEAN country nearly doubles in 2019. So this is a very impressive growth. It's much higher than the global growth rate. And then we also see very strong growth in the green loan market and the sustainability loan market in ASEAN. So in all, I think the region has a very good potential to grow in green finance, and especially in the local currency format, which offer investor quite a good diversification benefits.
Ivy, sorry, I believe you're on mute.
Thank you. Thank you, Luying, for quoting CBI's report. It's actually very encouraging to see that the ASEAN market did pretty well last year. The market size doubled, and I'm also glad to hear some optimism from you that you think the green bond market's downturn is just temporary, because like this is tied to my next question, because during the COVID-19 crisis, we saw a lot of discussion around what is the impact of coronavirus to climate change actions. Some worry that the coronavirus will stall the climate change action momentum, but some they are even more positive. They will see it as an opportunity for the green bond market to push ahead some climate agenda throughout this coronavirus, because resilient is the key word that we learned from the lesson of coronavirus. So let me turn to Julien again. We've actually seen some increasing calls for green stimulus package, and this related to what we've just discussed. We saw a lot of policy measures, and going forward, what do you think the green stimulus package could mean to the climate change action and also the development of sustainable finance across the world? Julien.
Thanks, Evie. Well, we've seen a flurry again of lots of stimulus package being announced across the world, from the US to Europe to Asia, of course, and that is something which would have to kick in a couple of waves to go forward. One wave today is the emergency, to just respond to the health situation and the lack of either equipment, facilities, support, of course, on the man staff and the workforce, on all these health-related, I would say, activities. Then, same within this emergency situation, a lot of money would be put at work to sustain employment, to retain employment, to fight, of course, in the very short run to this lockdown and dramatic drop of the economic activity we've seen. And then there is a mid to long-term plan, of course, and that is something which is left to be discussed yet, especially in Europe. Could be the same in the US and Asia, which will be the second and the forthcoming waves. That's where we will need a very strong backup from the policymakers. That is one thing. In doing so, of course, we would have to see how the private sectors, banks, corporates can, of course, help in that respect. That would be strongly driven by the policymakers. And what we are seeing today is something which will have to kick in, of course, in this socio-economic, I would say, world to sustain, of course, the SMEs, which is, of course, in strong relation to the fight against employment, of course, and then use this as well to develop the infrastructure. And that's where, as you mentioned, depending on the climate agenda, that's where there is a big challenge and big opportunities. Big challenge if there is a strong will to rush, I would say, the recovery, because again, there is a very dramatic shock today, and or couple this with a climate agenda. And that is something which is on the table now, on the table for us collectively across all platforms, across all countries to answer. And that's where, from a sustainable finance standpoint, many opportunities could be leveraged to use all the governing framework especially the green bond, social bond principle, for instance, the one that CBI has been, of course, following very carefully to I would say, muscle down this commitment. We need, at the end of the day, the accountability that is going to be asked by the people as well, could help the policymaker, the banks, the corporates, I would say, to develop this climate agenda.
So Julien, we've seen a wave of supranational issuance of bonds in response to the COVID-19. Can you share with us more insight into that, and what is in general the implication on sovereign and also corporate issuers in terms of green stimulus package?
So 2 questions in your question. One is related to the flurry I mentioned on the various issuances we've seen across the last 4 to 5 weeks, especially from MDBs and sovereigns. We've seen Australia, we've seen Bavaria, some regions. We've seen MDBs from African Development Bank to NIB and to Inter-American Development Bank and so on. So we can see that some of those issuers, having or not an existing green or social bond framework, according to green bond principles, so for those who may be familiar with that, have been or not using those frameworks to respond to the emergency situation. This is the case of some of the sovereigns. This is the case of some of the MDBs. Some others, at the, I would say, extreme, such as African Development Bank, have been using their existing social bond framework to just target specific proceeds with respect to the situation related to COVID-19. So we have a wide spectrum of issuers, from general corporate purpose, of course, with policies at the highest level of the institution related to, of course, fight I would say, against this COVID-19 within their health policies. And same from the socio-economic angle as well. They will use those frameworks to channel the money to sustain the economic development and the infrastructure. We have to see how it will work, I would say, concurrently to the government plans. In Europe, you have the EU, you have the European Investment Bank, you have, of course, the countries, and all this is being discussed today, especially in France or in some other countries, where we will see how this will work jointly, right? Some will be dedicated, like the European Investment.
So back to my last question, I think Julien has mentioned quite substantially on the implication of the green stimulus package. So maybe now I turn to Sean. Sean, we have discussed a lot about the issuer and the policy environment. So right now we would like to hear some viewpoints from an investor point of view. So could you share with us how the responsible investor respond to the COVID-19 crisis?
Right. If we could use as an illustration, tie all these up, including the COVID-19 to this ESG theme and sustainability of financing. Definitely, I think from the policymakers' point of view, we have to look into that very closely. How come the environment would come up with such an epidemic affect the world? So as an investors and being part of the involvement into this financing process, we think that it is very important to everyone's awareness how the green bond, the ESG related financing, the sustainabilities would related to the outcome of this pandemic affecting the world. So I think part of our investment role by looking into the prospects, of the opportunity, where these sustainability green bonds will lead us into. We could also look from the aspects, how the future, the next generation could make use of a system and the marketplace to make a better world. And when we look at the reason COVID-19 affecting the bond market as in fixing investors, we do see there is a very big gap from the perspective investors investing into the old world without these ESG elements into a green market, a green bond market, whereas it could provide the solution to these climate changes and sustainability. Of course, I think investors would first look into the benefit or investing into this sector, how they could benefit out from their objective. It could be, say, return. It could be, say, from a risk diversification point of view, or should it be more than that? As far as we are concerned, we do a very ESG conscious, and we do look into this green market very closely. And as Ping An, we do have a specialized investment vehicle designed to look into all these sectors, how we could help to shape up the financing platform to lead us into these ESG, sustainability, and climate changes for a better financing outcome.
So does that lead to an adjustment to the investment strategies due to the COVID-19
Early questions
crisis?
about whether we experience. Yes, that COVID-19, we do feel that have so much associated to our theme topic today. And from the risk return perspective, we think that investors have to add an element, the premium and the risk. Not they should participate into it. And probably when we evaluate these fixed income instruments, part of which we also have to add into the factors of risk. If we do not invest into these green bonds, what will be the other alternatives or the risk of not doing that? So, so to put that into short, we do evaluate and doing tremendous research into this green bond area. And recently, we do have a strategy specifically focused on China Green. And this market has grown tremendously since 2018. And this market is become also sustainable and to provide a risk diversification from global investors, including those investors from Europe. And I think the green aspects is not just risk factors looking by sophisticated investors in Europe. In Asia, in China, investors are being very sophisticated. They look into these climate changes, not just specifically in Europe, but in a whole holistic way, right? In Asia, how we could improve the environment, how we could make these green bonds to go into these objectives of green per se onto a better living world. Initially, they're very closely held by a theme or objectives of green focus. But now, after just very short period of time, the past 18 months, we look into the aspects investors universe, not even those investors specifically on green. They start to look into these bond sectors by association of how they could also have an element of green strategy in their, for example, total return bond fund strategy and tactics. So investors start looking into these green bond as one of the alpha source or strategy that they could diversify. So from a green perspective, the risk aspects of not doing so, investors now being very cautious, and they would be very carefully allocate their investment resources into this area. And we foreseeing probably in a 5 years time, we probably will see this market universe to be triple or maybe even more.
Wow.
So for Asian investors and China investors, definitely this will be one of the major focus going forward. And whether or not they have any specific fund vehicles like us, we design to invest into this market. To those investors, if they do not dedicate any specific fund strategies, they will employ these strategies as part of their strategies in their current investment portfolio. So we are very positive on these development, and I'm glad here today we have all our panelists representing in different parts of the world. We have HSBC, we have CBI, we have Ping An, and I think this will be a great drivers into this market. Yeah, thank you, Ivy.
Thank you, Sean. That's very exciting to know the tripling market size estimation of the 5 year in the 5 year time frame. So as we heard from Sean, that there is a lot of optimism in the investor space. So let us turn back to looking at the sell side, the issuer side. That if there are a lot of policy rolling out from different central banks in the world and also from the government, so I understand that issuer, they care mostly on the funding cost. So it will be a very important factor that they will consider when they issue a green bond. So let me turn to Luying, because I know you've been working very closely with issuers in different parts of the Asia region. So could you share with us how do you see these kind of policy measures can translate into funding costs going forward? Luying.
Thank you. Yeah, I understand that many people would be interested to know how the funding cost level looking in Q1 2020 amid the market turbulence. We actually have some very good indexes to guide us here. So for example, the Asia IG cash bond indexes increased by about 100% since the beginning of the year. The high yield indexes increased by 93%. So this all reflects an increased credit spread and funding costs for some of the international bond issuers. But however, the benchmark rate has been in record low. So if you look at the all-in funding cost, it's actually going to be a mixed picture. So for some issuer, it would be higher. For some issuer, it might be lower. Then if we turn to the onshore China, the situation is again so different. So the bond funding level for corporate, which is represented by the 3-year AAA corporate curve, moved from 3.41 to 2.69 over the last 4 months, which represents a 26% decrease. This is partly because the domestic risk-free rate, represented by the CDB, is actually only 1.86 now, move all the way down from 2.97 in the beginning of the year, so represent a 37-point decrease. So now a good quality issuer in China, like SOEs or the very good quality POEs, they can raise a 3-year bond at about 2.5 to 2.7%, a 5-year bond at about 3 to 3.3%. This actually represents an extremely low funding level in the China bond history. So the reason behind that is again due to the policy leasing, and then we all agree that the Chinese corporate, and the same as all corporate around the world, they would need this kind of help during the very difficult and very challenging market time in order to access to a cheaper money and then to keep developing. And then if we turn to the funding cost of green bond versus non-green bond, I think this is one of the questions that many people ask. So I think from our observation is that because green bond is exactly the same as a non-green bond in terms of credit quality, so we should expect a bond to price in line with a conventional bond. But in many cases, we do see that green bond price a little bit inside, maybe 3 to 5 bips around compared to say conventional. That's because that there are strong order books, there is strong demand from SRI investors like Sean, like Ping An to help increase the order book in order to increase the pricing momentum. So, but I think one good quality of green bond is that during the market turbulence time like now, green bond actually holds value better. So in a turbulence time, you don't see the green bond moving up and down very fast. That's partly also because of the green investor. They are actually the stickiness and loyalness is very good. They don't tend to take part in the speculation activity. They tend to be a long-term investor. So this all due to the SI investor. So in all, maybe the funding cost for green bond is not cheaper than their conventional at this moment. And this may be more true in Asia than in Europe, because I think in Europe, maybe Julien, you can correct me if I'm wrong, I think there are many cases of pricing benefit in European green bond already. And then CBI also done quite a lot of research on that. But I think in Asia, it's actually still the start of the journey, but we do hope that it will translate into something more concrete. And then I think to touch it a little bit, the sustainable finance opportunity after COVID, we remain very positive about this market. So although I think COVID will change some of our lives, so for example, before COVID, I think I won't be able to talk to all of you over a camera, but now I got the opportunity, which is really good. Then maybe later the business travel will be lower, and then we can save some of the carbon emission from flying around the world. And then we also see that demand for healthcare and the demand for the sustainable living infrastructure, for example, green building and sustainable waste management increase in demand because people stay at home and they do realize that they need this good infrastructure to be able to help with that, to live a sustainable life. And then from our observation, now is actually a very good time for the issuer to set up their green, social, and sustainability bond framework and the related documents, because the market is quieter, so they have time to turn to do this kind of job. And then when they get the opportunity, when they get the document ready, and then when the market comes back, they can just press the button and go. So it's actually a good time for the issuer to think about how to shape their future funding activity in the form of a sustainable finance. And then there are many, I think Julien and Xiaofei all mentioned about the COVID-19 bond. And then this is one of the key driver of the sustainable finance market in 2020. And then according to HSBC research, there is already US dollar 14.2 billion of bond issued in response to COVID-19. So some of them are actually economic compliance because they have the green bond principle compliance framework in order to issue the bond from. But some of them are actually don't claim to be economic compliant because they actually don't have the time to prepare the document in time. So for example, Republic of Indonesia, they issue a jumbo tranche in late March, which is used for COVID-19 response and then the related budget. So, but I think in all, we are all working from home and we all have some sort of change in our life for now, but we are passionate about the sustainable finance market. So our life will be back to normal, hopefully sooner or rather than later, but we believe that when it's back to normal, it would be a better normal. It would be a greener and more sustainable normal.
Thank you, Luying. We've got a question from the Q&A section following on what we've touched upon on the COVID-19 bonds. Before I let my fellow speakers to address this question, I would like to share CBI's on that, because CBI, we have been also tracking the activities in the COVID-19 bonds in China. So in the past 2 months, we've seen 399 pandemic prevention bond issue in China by 305 Chinese issuers. So the number is actually very huge because it exceeded the total amount of green bonds issued in 2019. So let me turn to Xiaofei. I understand that you have done a lot of research on this area. Could you tell us what do you think about COVID-19 bonds? Do you think it is a game changer to the sustainable finance development in Asia?
Yeah, definitely. Thank you, Evie. That exactly this is an excellent question, because that we do see, as other panelists just mentioned, that we do see that the social bond has gained the momentum, that due to the coronavirus situation, perhaps, that we see that, for example, in the Asia Pacific region, the social note sales that has almost that already being at 90% of the issuance of last year. And also that for in the globally, that we also see that the social bond issuance is on track to almost double the issuance of last year. So, and whether or not, let's say your question about whether this will be a game changer, I think that that will depend on quite some key element. So for instance, that we have definitely the need here. And we also have the demand that, like Sean just mentioned, that from the SRI investors, that there is the demand to invest in such instrument. And we also know that the social bond can be used as this type of issuance that can be used as one of the solutions to fund the gaps of the core social services like the healthcare. And also that Natixis, that we have done short investor survey last month, that to test the investors' appetite and also to obtain the opinions and views from them to see that how they look at the COVID-19 social bond market. So I would like to mention two key numbers come out of our survey. First of all, that 96% of the investors that we talked with that do think that the social bond format fit in the COVID-19 related expenditures. And secondly, that 88% of the investors believe that the COVID-19 related bond do also could fit in, that they are thematic investment strategies. So from that we see that we have the need, we have the demand, but can we direct this capital effectively towards the more sustainable, like Luying just mentioned, the more sustainable and the more resilient direction remain the key. And also only this will actually decide whether or not this will be a game changer. And we also see that the COVID-19 actually related to both the social and the green issues, that we see that COVID-19 actually related to almost all the 17 SDGs. So it's interesting enough. And we also see that the linkage between the 17 SDG goals have never been this compelling, perhaps. That, for example, we see that the lockdown period aggravate the poverty and increase also the inequality. But in the meanwhile, we also see that result in the reduction of pollution, that also the greenhouse gas emissions. So therefore that we see the opportunities for both sides. And also already just right now, at the moment that we see in the green bond market, we have always been discussing the additionality issues, that the investors always ask about the additionality come from the green bond issuance, and they always challenge on that. So perhaps with the current situation, that when the liquidity is scarce in the market, that the investment in the in green bond could actually provide the finance to the green project that would not happen otherwise. So we could actually now positively address the additionality problem. And next to that, if in the longer term, also as Luying mentioned, that if we can actually research and publications start to address those questions, that if the data is available post-crisis, and if we can prove that the green asset is more resilient than the brown asset, and the green asset has less volatility than the brown asset, that will directly link the funding cost of the green issuers. And then I think that would be the game changer for this market.
Very well put it. Thanks, Xiaofei, for that. Sean, do you have anything to add on Xiaofei's comment? Because do you agree that actually the investor appetite has changed due to the COVID-19 crisis? Because I think what we've been discussing is about the COVID-19 crisis actually offer an opportunity for investors to reflect on the issue of resilience. And I'm sure in terms of investment case, there will be also some adjustments. So Sean, would you like to add some comment on that?
I think, yes, Ivy, I think the situation, we could address like this. I'm totally agree with Xiaofei, which is answered your questions very comprehensively. And I think as a professional investors, if we look into the aspects of COVID-19 as an example about this ESG, about the green and climate change area, how as a professional investors we could able to change a little bit of this and to improve a little bit of everything. And if we have a remote control and wind back before the COVID-19 situation, if investors could have done, what our theme topic is all about, we could avoid another serious epidemic impact such as COVID-19. So what I'm trying to say is, I think going forward, we have to look into this topic very seriously. How we could, improve the environment, improve the climate, and to avoid any pandemic such as COVID-19 by investing with some social responsibilities, with a profit governance policies, as well as, to look into all these projects and financing areas more carefully without diverting the responsibilities of not doing so. So when we look into all these projects, we do also about those green analysis, how we could play a better role and invest into an areas that we think could able to bring a much better environment in 5 years, 10 years time down the road. Disregard, whether or not the bond investment could able to enhance the overall return. Like I addressed this in early my previous conversation by saying that part of this risk premium we have to look into an element of green, right? And the risk would also tie closely to that. Despite the fact that I heard what Luying saying, the green bond holds relatively well, and as a long-term investors like hang on into these green bonds, but when we look into the aspects or within the risk factor, if we are not investing into that, then probably it will make the world much difficult and challenging to address what we've been discussed here today. So I think as a short summary, as professional investors, we do have to look into these green bond areas very seriously, and whether or not you have a portfolio specifically designed into this thematic, or you have a proper normal strategies in your portfolio could apply these green bond strategies as address some of these climate changes issue. I think everyone's have to play a part. Otherwise, we will lose the purpose of having today's discussions and the strategies going forward. Yeah, thank you, Ivy.
Thank you, Sean. Conscious of time, I would like to conclude the panel by inviting each of my fellow speakers to address a final question. So very quick, very short and sharp. So if you were allowed to ask one question to either policymakers or the market players. So what would be the top question that you want to address to them for sustainable finance? And it is a question that may determine the future of sustainable finance or the wider sustainability agenda going forward. So who will be the first one to answer?
Maybe I can go for this
Julien?
one.
Okay.
Well, I would say that for everybody, the question is what's in it for me? I would say what's in it collectively by using a sustainable finance tool. And I would advise first to, I would say, watch again, I would say, this seminar, this broadcast, because listening to Fei, Luying, Sean, and Xiaofei, of course, we see lots of opportunities for investors, of course, for the corporate issuers when it comes to, I would say, liquidity, greeniums, as Lynn mentioned. This is something which is happening in the market. And of course, accountability. That would be for the policymaker to, I would say, leverage, again, from the sustainable finance tool to explain better how they would put money at work, why the budget deficit would be such high, and why would be the forward-looking, I would say, commitments and strategy behind. What Fei mentioned is very key. The green and social, this is all working in conjunction. The interlinking of SDGs, the 2030 agenda, is clearly stated by saying that the COVID-19 is all related, its impact is all related to all, I would say, SDGs, 17 SDGs. In that, again, the green, I would say, forward-looking commitments are working together with the social target as well. So, I mean, what's in it for all those market collectively, we will have to answer to those challenges.
Thank you, Julien. Would like to go next, Louis?
Yeah, I think the market would benefit from a great development if investors would be like Sean and Ping An to have a systematic thinking about how to incorporate ESG into their investment strategy, and then maybe in a more systematic way. But I understand that many investors are actually facing difficulties in this. For example, in terms of data quality, how to measure ESG, how to analyze green, social, and sustainability bond. So I think we do face some technical difficulties here. So maybe for market to develop further, and then with more webinar like this and more organization like CBI to do more market education, so the investor community would be more active, and then to participate in the sustainable investment, and then that would be really helpful.
Thank you, Luying. Xiaofei?
Yeah, so I think that both Louis and Julien picked the smart ones. So I have a simple one. So I think that the question is that what we could learn from this COVID-19 crisis, and what we should do for going forward, either to to prevent or to deal with such crisis, or for the climate. Then could be that we need to act fast, if it's not faster. This is something that we could learn from the coronavirus crisis, but we can also apply this to address the climate issues.
Thank you, Xiaofei. And Sean, question from the investor.
Right. Yeah. If I have a chance or opportunities to ask the question to the policymakers or to give them some inputs, would be definitely the policymakers, regulators. They could have a direct influence on this green ESG climate changes market by some kind of incentive, including, for example, tax concessions, for example, capital classifications, how investors like bank treasuries investing into these kind of bonds could have different differentiations with capital measures and calculations. So all these were able to help to grow this market and make it more effective, and awareness from professional investors like us. Yeah, thank you.
Thank you, Sean. Thank you, all my fellow speakers. That nicely wrap up our discussion today. So a big thank you to all of you. And sadly, there's no applause button that I can use and the audience can use, but a big thank you to you all. I hope everyone enjoyed our discussion, and thank you for staying with us to the end. So there are many interesting webinars coming up from CBI, so do please stay tuned. Bye for now. Thank you.